Welcome to Nara Investment Research, and today we are looking at a stock that is currently down over 80% over the last 3 years, and of course I am talking about none other than PayPal Holdings Incorporated, or PYPL as it trades on the NASDAQ. Going right into our company fundamentals, we have good net asset growth, good revenue growth. We have a debt to asset of 54%, which is pretty high, and we have a net profit margin of 14%, which is not bad. So overall, I'm going to grade PYPL company fundamentals an A-. Jumping into our stock technicals, it looks like we have a PE ratio of 33.8, which compares to an industry average of 27.95, and that's the industry average for consumer discretionary, which PayPal falls under. Looking at our EV to EBITDA, though, it's a bit of a different story. PayPal's EV to EBITDA is 11.28 compared to the industry average of 17.03. So when debt is factored into the valuation, it looks like it's actually undervalued compared to the industry average. Whereas if you were to just look at the PE, you would think it's overvalued because it's just above that industry average there. Looking at our price to book, we have a price to book of 3.54 compared to an industry average of 9.4. So it's just over a third of the industry average for price to book. So that's really good. Our 50, 20, 90-day moving averages, it looks like they converged in November, and they're showing an upward fan from there. So that's just a very simple way of doing a technical analysis. But it's straightforward, it's easy, and usually pretty reliable. So I like the looks of that, and we are going to grade PayPal a stock technical score of A-. Taking a look at our economic conditions, it looks like the market has largely shaken off the headwinds of both high interest rates and inflation, but there's still increased uncertainty going forward, as well as a lot of uncertainty about the federal government's interest rate decision coming up at the end of this month. So overall, we're going to give the economic conditions a B. And taking a look at our company potential, it seems like the reason why PYPL is down so much today is largely due to increased competition in the digital payment space. However, PayPal still owns over 40% of the payment processing market share, and it looks like their new CEO is promising a lot of innovation coming up for their next event. So things are looking promising going forward. So we're going to give the company potential a score of A-. Now, as far as what other analysts are forecasting, it looks like their target high is 101. Their target low is 55, with an average one-year forecast of 71.58. That represents a 13.6% increase over where it trades today. And for our forecast, we put a target high of 77.50, target low of 63.41, with an average one-year forecast for PYPL 70.45. And that represents an 11.8% increase over where it trades today.